Good morning and welcome to the TRACKWISE Designs PLC full year 21 results investor presentation. That is a recorded presentation. Investors will be in listen-only mode. Questions are encouraged and can be submitted at any time by the Q&A tab situated in the right-hand corner of your screen. Just click Q&A, scroll to the bottom, type your question and press send. The company may not be in a position to answer every question received during the meeting itself. However, the company review all questions submitted today and publish responses where appropriate to do so. Before we begin, we'd like to submit the following poll. I'd now like to hand you to Philip Johnson, CEO, and Paul Cook, CFO Designate. Good morning.
Good morning all. I hope you can hear us okay. So myself, Philip Johnston, CEO, and Paul Cook, CFO Designate, here to present to you the TRACKWISE 2021 results and also provide a half one 2022 update. As this is the first time you've all met Paul, whilst there is a brief bio on the slide 22 below, I'd just like to say ask Paul to introduce himself, say a few words by introduction. Just by way of full disclosure, so Mark, our current CFO, will be staying on through to the AGM, and the formal handover will take place at the AGM.
Good morning. I'm a chartered accountant. I qualified with KPMG in the 1980s. I did some corporate finance work after that and moved into industry. I set up an internal audit team in a large PLC and moved into industry, working as a financial controller for a private equity-owned business in the food industry. Then moved into FMCG, followed by clothing, and then various roles in industry and manufacturing businesses, electronics in particular, with 2D barcode readers, and X-ray and non-destructive testing equipment. The last 8.5 years before I joined TRACKWISE, I was the Chief Operating Officer and Compliance Officer for YFM Equity Partners, who are a private equity business. They manage the two British smaller companies, VCTs, and also manage a number of limited partnership investment funds.
Thank you, Paul. So Paul's actually been with the company since June, already make a big difference, and we're very pleased to and very lucky to have him as part of the team. So on to the presentation itself. So I think that's the agenda you can see in front of you. We'll run through operational highlights, obviously the financial highlights, review the operations, summarise the investment case, and the summary. So the key messages we would like everybody to if we've done our job to take out of this presentation, and the first one really is that with your help we are building a world-class manufacturing capability. So at the top end of our capability, and we'll talk about that, we believe we are one of, if not the world leading manufacturer of global flex PCBs. And the Stonehouse capability that we're building down the road 20 miles south of here is a global state-of-the-art flexible PCB roll-to-roll manufacturing capability. So I think as a small business, we're very proud of that, and again, thank you for your support in doing so. We'll talk about the growing pipeline of IHT customers and opportunities, and draw your particular attention to the very, very significant demand that is for electric vehicles, CCS cell connection systems, and this remains, is not even a once in a lifetime opportunity, once in an epoch opportunity in front of the business. I think none of us would disagree that these are challenging times, and clearly as a manufacturing business, as an employer, and just as individuals, these are challenging times. We have been impacted them. We continue to be impacted them, but we continue to address them. We've formally welcomed Paul Cook as CFO of the business, or CFO Designate. We also announced previously that we had hired a very good COO, Chief Operating Officer Steve Hudson, who is the one who's setting up the greenfield operation at Stonehouse, and we'll also tell you of a new managing director that we have recently appointed at Stevenage Circuits, Christoph Book. So really, with I'm certainly very pleased with the significant strengthening of the operational and senior leadership team of the business. Cash is obviously a concern to everybody. You will have seen the accounts issued yesterday. We still have to conclude a number of asset finance deals, and Paula will talk those through, but we are confident of delivering our own cash bridge through to production, and obviously we'll talk to you about that. So I think really as a summary of all of those, TRACKWISE as a business, we think we're an immeasurably better business and more experienced business and a more capable business than when we came to IPO. And for the reasons I've described above, confident of the long-term outlook. So on to the financial year 21.
Yeah, so just as a summary of the financial year 21 results, revenues were up 32% compared to the previous year, reflecting both the growth in IHT sales out of the TRACKWISE business and also a full year contribution from the Stevenage business, which was acquired in April 2020. Adjusted EBITDA is basically flat on the year. Just a small operating loss of £580,000 compared to £190,000 the previous year, and net debt at year end of 2.1 million compared to a cash position of 11.35 million at December 2020. And we've got a slide which goes through the cash flow for the year, which will give a bit more flavour to how that's moved.
So on to the operational highlights for the year. So in June of 2021, so June last year, our UK EV OEM contract was amended to remove the Q4 21 production, actually to extend the contract for a further year, with a value of up to 54 million. So I'll just remind you that the terms of that contract are based around a guaranteed minimum volume, and the implication of that is if the guaranteed minimums are not met by the customer orders, TRACKWISE is eligible for a compensation payment under the terms of that contract. And again, we'll talk to you a bit more about that in due course. So Ashvale, our site in Tewkesbury, where we're speaking from you today, remains an engineering-led new product development, product introduction facility, leading customers through to the point where, like the UK EV OEM, they want and need to be manufactured at scale, in which case they'll be transferred down the road to Stonehouse. During because of the scale of the UK EV OEM contract, we identified and acquired a freehold premises in Stonehouse, 20 miles south of here, and during the period we did an extensive refurbishment for the site, started the procurement and installation of the roll-to-roll manufacturing capability. As I've said, 2021 was a challenging year to be in business, with well-publicised supply chain challenges, and that made delivery of such a complex and large capital project clearly a challenging thing to deliver. And so for this reason, we had to come back at the tail end of last year to raise further capital in the market. And if you contributed to that, thank you very much for your support. So the factory fit out is complete, and we very much look forward to welcoming you to the site. We've got some images in this presentation, and they don't do justice to the site. And we hope and intend to have a couple of markets day later in the year, in which we hope at least some of you will come and attend. So in spite of a challenging year, it was a transformational year for the business, and we closed the year with a record IHT sales and order book.
So just turning to the financial results for 2021, the revenue line, as I've mentioned earlier, reflects the increased IHT sales and the full year of Stevenage circuits. There were some costs which we incurred on the new site, getting it up to specification during the year, £941,000 of those. And the interest line has a cost has increased as a result of new borrowings that were taken on during the year.
Sorry. Right.
Looking at the balance sheet, again reflecting in terms of intangible assets, the further development of our IHC capability and roll-to-roll flex manufacturing that Philip's referred to. The fixed assets reflects the purchase of the Stonehouse property, which was a £3 million investment, and new equipment that we bought for the new site. Other debtors, which is a very big jump on the previous year, reflects the fact that we have £6 million worth of deposits that we've paid in advance on new equipment. Typically, when you buy your large capital equipment, you pay a percentage of that investment or that cost up front. So that's what's reflected in that number. The borrowings number has increased as a result of the taking on the Stonehouse mortgage, which came through in October. And then, as Philip was mentioning earlier, the equity raise in December, some of that cash was actually received in December. The majority of it was actually received in January this year, so isn't reflected in the 2021 balance sheet. Moving to the cash flow, again reflecting most of what I've said earlier. The capex line is the purchase of the building and the equipment at Stonehouse. There's the equity that was received in December, and then the borrowings that we received in October on the Stonehouse mortgage. Looking at cash flow from operating activities, which feeds into the cash flow we've just been through, the major highlights are an increase in depreciation and amortization from the previous year of 1.4 million compared to 1 million, and then phasing of purchases at the year end pushed our creditors up, and the company currently isn't a corporation taxpayer, which means that we can actually get our R&D tax credits paid as cash rather than being offset against a corporation tax charge.
And such a receipt will take place this year.
Yes, and we've got another one expected to come in the next couple of months. So looking at the H122 results, preliminary results, revenue is 3.8 million, which is a slight fall on last year. Two reasons for that. The Stevenage circuits business in last year had a large order which was supplied via an overseas supplier. The customer for that has had to redesign the boards for that order. So we're expecting that order to come through in September or October of this year. And the other one was a slight reduction in the sales of Iht.
If I just expand on that, so in the prior year in 2021, we actually had a one-off very large contract with a nuclear fusion customer. I don't know if you recall, we had a publicity about a 72-meter long part that we produced for them. So that was a big one-off in 2021. Actually, the EV production in 2022 is very much increased over 2021. So yeah, by I think about a factor of 4. So slightly hidden behind that the overall revenue number.
So adjusted operating, we delivered a small adjusted operating profit in the first half compared to a small loss last year, so effectively break even. Adjusted EBITDA increased over last year, reflecting the increased investment in the business. Total order book of 7 million, of which 4.6 million is for Iht products and 2.4 million is for the Stevenage circuits business. Net debt at June was 7.8 million, an increase from 2.1 million at year end. And I've got a cash bridge which shows the movement in cash from the year end to where we are at the end of June. So as I said earlier, we had a share issue which came in January. That was £5.5 million. We've secured HP funding on our capex of 5.2 million, and we've drawn down some of our short-term invoice discounting facilities in the month. Obviously, we've had a contribution from the business of EBITDA. And then we've had further capex in the first half of 5.7 million, a significant increase in working capital, which I'll come back to in a moment. Further factory startup costs and further capitalisation of R&D, and some debt repayments mainly on our HP funding. Working capital movements driven by a couple of major issues, major things. Firstly is our purchases of nickel foil The terms that we've had for those purchases have been up to this point 25% payment on order, 50% payment in advance of shipment to our supplier, and then 25% paid on 30 days end of month. And we'll talk about that in the next slide. But we've managed to agree change to those terms going forwards. We've also had
but at the moment we've got about £1 million of
yes, we've got we've got on the balance sheet in June, we've got about £1 million worth of deposits paid up front for nickel supplies going through to November this year. And one of the other contributors is at Stevenage. There was a major supply issue with one of their major materials last year, that the lead time went out to 9 months. And they also needed to they placed some large orders for those materials to meet an expected increase in demand from their biggest customer, which unfortunately didn't materialise this year, but is expected to come through next year. So we expect that stock level to start unwinding in the second half of the year.
Yeah, and that's for Stevenage's largest customer, a firm called Iron Science. So the next slide answers a question that Colin has raised. Have you raised enough money to see you into profit? So hopefully you'll get the answer to that question. So
I think I think we need at this point we need to address the statement that in the interim statement that came out, the preliminary statement that was made that was published yesterday, where the auditors have stated there's a material uncertainty related to going concern for the business. Now, at the moment, the audit profession is under a lot of pressure because of more recent company failures, which I'm sure you're aware of, and they're being very, very cautious in terms of signing off on going concern. So what we've done for them in terms of our forecasting is look at what our downside scenario would be in terms of cash. And they've also looked at what facilities we've actually got signed, sealed, and delivered as at the end of June. As I said, we've secured some HP funding on fixed assets and capital expenditure, but the gap that they identified was about 6.8 million. Now we believe that we have or will have in the very short term put in place sufficient facilities to cover that gap, and there are three major contributors to that. As I mentioned earlier, the nickel foil supplier terms are quite disadvantageous to us for that. So all orders that we've got in place at the moment through to November are on the previous terms. Our supplier has agreed to for future orders to go to standard trading terms, which are 30 days and a month. Now, as that unwinds, that's a benefit to us in terms of cash of £1.4 million.
But as of today, that's not in the supplier agreement, yes. And so therefore the auditors has had to assume we carry on ordering nickel in the 25, yes, 50, 25 trading terms.
Disadvantageous terms. And we're very close to having the actual formal supply agreement signed up with the supplier.
Can I just add about HSBC?
Yeah.
What do you want to add about HSBC?
No, we're aware of the fact that the supplier is able to do this because one of the major banks, their banker, has agreed to provide them with invoice discounting facilities and trade funding facilities, which and that they are also our bankers who have been extremely supportive through this year.
Provided our mortgage, provided
yes.
us a big chunk of asset finance, so
and our invoice discounting facility,
and also this trade finance facility.
Yeah. So coming to well, I'll cover the trade finance facility. At the moment, we have a facility with the bank, which we put in place for a different purpose. That facility we didn't actually use in the end, but we've agreed with them that they'll convert that to a trade loan facility, and they're going through the process of that at the moment. In terms of HP facilities, we are expecting credit approval for £2.3 million worth of facilities against current assets that we've got in Stonehouse, but also assets that are still to be delivered. And we're also in discussions with another bank on the balance of the £2.1 million against equipment that will be delivered in September or October. And then there are potentially other options, and I think it's really important to point out that the forecast that we've done for the auditors do not include any potential receipt from the GMV compensation payment that Philip referred to earlier. So in our forecasts, we have put that back to a receipt in August next year. But technically that payment would be due much sooner than that, because the GMV payment, compensation payment, relates to the calendar year. So once the calendar year is over, we can see what they've ordered, what we've delivered against the minimum volume that they're contracted to order from us.
But again, the orders have, because that is not nailed on, the auditors have discounted it, and we've discounted it. So
so there are other options in terms of raising finance. We've spent a lot of money upgrading, refurbishing the facility at Stonehouse, and we believe there's something like £2 million worth of equity in that property, so we could release that through a sale and leaseback. The other option would be potentially, which we would rather not do, but we could come back to market to raise further funds.
Yeah, so I think that certainly is not the preferred option, and I think in our opinion the material uncertainty, which seems to have had a bit of an adverse reaction in the market yesterday, I think we feel is unjustified. So I can't argue with the market, but we feel we've got a plan in place to get through to production. As a result of some conservative assumptions, we've got some some backup to that plan. So the answer to the question, yes, we do think we've got some sufficient funds to see through to full production. So yes, so if we've now just gone to review the operations, so Advanced PCBs, Stevenage Circuits celebrated 50 years this June, which is a good milestone for any business, and we're very pleased with the business that is part of the TRACKWISE group. So Paul has already described it, as solid operations, and I think in short that's what the first half is. The first half is showing. So we've mentioned Christoph Burke has come in as a new MD, and we're very confident in his ability to continue to drive the business forward. We are making investments. We have made and continue to make investments in both their manufacturing capability and capacity, and we're very proud and pleased to have Stevenage as part of the group. I've talked about the UK EV OEM contract already, but just to really emphasise, the contract was based around these guaranteed minimum volumes. It was always a risk that these volumes wouldn't manifest itself, and so in the contract is a clause whereby we'll be eligible for payment in the event of that shortfall. The customer hasn't delivered to market as quickly as they would have liked and as we would have liked. I think, as I said, we've been delivering our own innovation in a challenging market, and they've been delivering their innovation in challenging times. But however, their products, their bus, their van, have both achieved EU certification, which I think is a major milestone for them as a business. They've passed all crash tests, roadworthiness tests, safety tests. So, if you're following them on Instagram, or these products are driving around the roads at the moment. So, they've announced publicly their plan to deliver 400 to 600 vans this year, and I think it's also worth noting that they've got 140,000 non-binding LOIs, letters of intents, and orders for variants of the van. One microfactory that they're building in can build 10,000 vans a year. So fundamentally, they've got 14 factory years of demand. So demand is not the issue; it's merely about delivery. So they've announced the start of production this year. They're going to deliver product this year into production, and unfortunately for some of our colleagues, they've announced an operational review and headcount, but in our opinion, that's probably a selfish net positive for us as a business to the fact that they've got sufficient funds to get through to their start of production. So Stonehouse is a facility specifically built for volume manufacture of Iht. As I said, we acquired the freehold property last year. The factory fit out is complete. There are some rather inadequate pictures of the before and after, and these show some of the installed clean rooms where the equipment is going to be installed or is installed. And I think it's worth pointing out, and in light of what's coming the next few slides, we have laid out phase one in the initial installation in full knowledge of where and how we would scale that up to phase two. So that equipment installation is nearing completion. We have delayed the start of production, and particularly things like people hiring in order to match the UK EV OEM demands, as that I've just talked about, and obviously to minimise our own costs as a result of that customer delay. This is again some images of some of the equipment that we've installed there. This is a scale up of the roll-to-roll manufacture capability that we've developed downstairs here in Tewkesbury. So that same or similar equipment implementing developmental know-how. And I've seen some of the questions about IP, and that this development know-how is a very big part of that. So unlike the low volume, high mix that we've got downstairs, this is specifically implementing high volume, low mix. And as I say, we're very much looking forward to welcome you to TRACKWISE, to Stonehouse. So the next slide after this is going to talk to you about the pipeline, and I think you've probably seen this pipeline slide, and I'll talk to you about developments of that. But the one thing we really wanted to bring to everybody's attention is the very, very significant opportunity in front of the business for EV CCS or cell connection systems. So any electric vehicle is based around an assembly of cells. And each one of those cells needs to be interconnected and controlled. And the way that is typically done is by temperature and voltage monitoring and some fusing. And it has emerged over the last year, I would say, that flex PCBs have emerged as their de facto standard of how this is to be achieved. Now, the manifestation of that, and also the very, very significant consumer and regulatory expansion of electric vehicle demand has led TRACKWISE to be involved in the pipeline of active bidding opportunity highlighted in the box below, which sums in their totality to more than 500 million pounds of business. Now, clearly, we're not going to win them all, and we couldn't manufacture them even if we do win them all. But I just wanted to bring that to your attention. I also note in our annual reports, which is on our website at the moment, one of the risks is that a potentially better funded competitor could come and eat our lunch, and we recognise that as a risk. And I draw everybody's attention to CellLink in the US. So CellLink is a private corporation. They have got a number of cornerstone corporate venture investors, and then their Series D has raised $250 million of investment. So at one level, that is the manifestation of our risk that a well-funded competitor can come and eat our lunch. But I include it and bring it to your attention really as a testament to two things. One is the fact that flex PCBs is the technology of choice for this sector, and then secondly, to give an indication of the size of the market opportunity. CellLink are manufacturing in the US, and I think they're a supplier into Tesla. Obviously, they could come and set up a factory in Europe. There's no indication of that at the moment, but both of the size of the opportunity and the size of the investment in the competition, I hope is I was about to say a wake-up call, but that sounds wrong. But validation. A validation. Thank you, Paul. Yeah, a validation of the market opportunity. So TRACKWISE is in general going to be approaching this via a tier 1. So we would typically be a tier 2 or tier 3 supplier, and I think probably that is a bit more comfortable than us being a tier 1 supplier. But the OEMA in this box, we are bidding as a tier 1 supplier, and in that particular case, I do know for a fact that we're the only UK supplier that has been pre-qualified to receive that RFQ, which, I mean, I'm disappointed that's not in my inbox so far, but it really genuinely is imminent. Another one that I would point you in the direction of OEME. So this is, we're not going to come in and, sorry, I pointed the direction. SOP gives an indication of when we have been advised by our customers, our prospective customers, that start of production would be. So you'll get an indication of timeline. Typically, they would require us to be off production tooling a year before that, and obviously a contract would precede that. So whilst the headline, the dial moving revenue is probably indicated here, we would anticipate, if we're successful, some contracts award to happen much sooner than that. The one that is likely to hit the revenue line quickest, has got the potential to hit the revenue line quickest, OEME at the bottom, where currently a European OEM is being supplied by Chinese components, and the European tier 2 supplier really wants to localize the manufacture, and is very keen for us and is pulling us to displace the currently the Chinese FPC manufacturer. And so that, just to be clear, we haven't won that business, but we've got a very positive customer, and that would in our own internal planning land in quarter 2 next year. So that is the nearest term opportunity. What was I say about that? Yeah. So one thing. So our current UK customer is building cells into modules, and then putting the modules, it's roughly a foot square block, which they're then packaging as they need, depending on the number that they need, into battery packs and therefore into their vehicles. And that is also true of OEMA. Now, that Lego brick approach is a very, you can understand why you would do that, because it's you can build a standard module and you can package it in the way you want to. However, the packaging is both expensive and takes up weight and space. So therefore, if you want a very efficient vehicle, both in terms of in cost and range, you need to get rid of the module. And so there's a newer technology called cell to pack or cell to vehicle, and that is, as the name suggests, putting the cells directly in the vehicle and connecting them all together at a pack level, not as a module. And so that tends to mean that the pack is vehicle level, and therefore a couple of meters long. So in that case, these cell connection systems are a couple of meters in length. And as I've said, one of our USPs is our long flex capability. So really, the larger they are, the better from our perspective. So I think this cell to vehicle, cell to pack is the opportunity for us. So, sorry, I could witter on all day about this. So if I've achieved one thing, is to give you an indication of the size of this opportunity in front of us. So that's really the EV vertical. I've largely talked about the one at the top, for example, is an addition where we've just been approached by a global tier 1 who not only want to replace wiring in battery packs, but also actually replace wiring. So I think probably some of you will read in the press that Ukraine were quite a significant manufacturer of vehicle harnesses, and the tier 1 in question had to pick up sticks and move factories to Poland in pretty short order. Now, these factories, the current technology is typically women. It's usually women sitting by hand, wiring individual wires around pin boards in a manual operation. And I think everybody's, the traditional response of that has been to move your production factory further east or further south. And I think people are realizing that that is not a great solution, isn't a long-term solution, and therefore the tier one has come to us because what we're offering is a capital-intensive, machine-intensive manufacturing process. And so that's a very interesting development for us. And actually, we've got our existing UK EV OEM coming to talk to us this week about the same opportunity. Our three verticals, EV, then medical and aerospace, we think broadly 2022, 2023, 2024 in terms of going to production. We think the margin is increasing from EV to medical and aerospace, and our protectability, EV medical to aerospace. And again, people have asked questions about patents, which I'll come back to. Medical is progressing. I can't say as quickly or as fast as I would like to have done, but it is progressing, and our relationship with Catherine is going well. But the real significant activity and development activity is in the aerospace. Both spacecraft solar arrays, the top one, spacecraft launch vehicle harnesses, but also in aviation, both conventional aviation where existing EU OEM is looking to replace existing cabin harness, but also new electric aviation where we're supplying cell connection systems into battery packs. I would also I would also just draw your attention to the on-ground de-icing. So when you're sitting in a cold climate or whatever and waiting for your plane to take off, they'll come along and spray the aircraft with glycol, which never seems like a great environmental solution. But we've also been led to believe that that can cause an OPEX for up to $1 million per aircraft. So our US customer is going to apply long strips of IHT to the wings of that aircraft to apply microwave energy to melt the ice. Not to melt the wings, as I said yesterday in the presentation, to melt the ice. And so that is not only an environmental benefit, but also a significant OPEX benefit. And as that is a non-flight item, does mean that the regulatory hurdles, and therefore we're hoping to get that to production sooner than we would otherwise do. And then on the left of the slide, we continue to see some very interesting long flex opportunities from a worldwide basis. So one, for example, a company has recently approached us about putting long flexes into greenhouses to stimulate the plant roots of plants to make them grow quicker. And I did check to see it's not April the 1st, but apparently it can be done with significantly reduced energy, etc. So and these people come from around the world to TRACKWISE. All of these ones highlighted in yellow is due to our long flex capability. So I really come back to the message that we have developed with your assistance a globally leading long flex capability. I hope you'll have seen our new website, which we launched, and one of the things we've added to that is an investment case, so to summarize what we put in there. So TRACKWISE is a developer of a proven disruptive technology with, I hope you would agree, immense global potential. For aerospace and electric vehicles in particular, it's a significant carbon reduction technology. We hope and expect to receive the LSE Green Economy mark before too long. I think we've identified and told you about significant addressable markets across multiple industries. We landed last year a multi-year production contract. Okay, we've had some issues with that, but the contract envisaged those issues and provided a solution for us. As I said, we're building a world-class manufacturing capabilities, and I'm pleased when the invitation comes, come and see it. Our first, second, and third priority for the business is to get Stonehouse up and running and start to production. But really, these world-class manufacturing capabilities have produced one of, if not the leading supplier of long flex PCBs. So you'll see an image on the right of the double belt press, and I say here a key enabler of the patented multi-layer technology, and we'll come back to the IP in the Q&A. That was envisaged in the patent when I filed it in January 2012. So it was certainly a major personal I won't say triumph, landmark for me when that got delivered and commissioned. It is a key enabler for our patented technology, but also allows us to grab further added value in other parts of our business. I think we welcome Paul to the team. Steve Hudson's doing a fantastic job in difficult circumstances, bringing a greenfield manufacturing operation up to site, and we've mentioned Christoph at Stevenage Circuit. So I've got a summary slide, but maybe I'll save that till after the Q&A. So I know, how do I hand back?
Hi there, Philip. Thank you for your presentation. Thank you, Paul, as well. Ladies and gentlemen, do please continue to submit your questions using the Q&A tab just situated on the right-hand corner of your screen. But just while the team take a few moments to review those questions submitted already, I'd like to remind you that recording of the presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. Just before we move on to the live Q&A, we did have one pre-submitted question, if I may just read that out. Are you supplying or contracted to supply IHT products to any other EV companies besides Arrival?
So yeah, thank you. I think you mean the UK EV OEM, but so the answer to the question is we're not contracted to. So we are supplying development parts, and we have done over the years and continue to do so. But that is the one production contract that we have at this point in time.
That's fantastic. That concludes those pre-submitted questions. If you just click on the Q&A, Philip, Paul, and just where appropriate to do so, just read out the question and give your response. That'd be great. Thank you.
Yeah, thank you. So I think there's there are some on competition IP, which I think we'll talk to. Yeah, so there was one from Quentin. How would you respond to the view that you underestimated the funds you would need to get to a position of ongoing profitability? Well, I think as CEO of the business, I must take responsibility if that is the case. I think we'd all, even I might be wealthy with the benefit of hindsight. I think if I was asked by one of our investors earlier today if there was anything I would have done differently, and I think certainly. The answer I gave was I would have raised more at the IPO. So I gave the example of CellLink, and I'm somewhat jealous of my our highly funded competitor over the water. So I'm certainly not going to point the finger at anybody, and anyway the buck stops with me. I think we have been, since we've been a public company, we've had Brexit, we've had COVID, we've had the post-COVID, supply chain disruption, and now inflation. So I can't say we've been lucky with our timing. If we'd had a perfect crystal ball, maybe we would have, done differently. If we haven't built a roll-to-roll flexible facility before, so we've certainly taken some learning out. In our cash flow forecast, we hadn't foreseen to buy a freehold. We hadn't forecasted to put, £1 million into our nickel supply chain. So, there is a significant degree of learning held. But if there's anybody to blame as CEO, I'm going to take the blame rather than pointing any other direction. A message from Neil T. So. We like somebody who says, congratulations, Neil. Congratulations on flexibility in navigating a particularly challenging period. Neil, thank you. You mentioned CellLink's $250 million raise. How do you assess your competitive lead? So I'll deal with that. And there's a follow-on question about patents, because I believe somebody else here has asked, Quentin's also asked about patents. So we're obviously very acutely aware about competition, and as I say, at the top end of our capability, we don't believe we've got we don't believe we've got a competitor on the world stage. So I gave the example of that nuclear fusion customer, a 72-meter long part. We don't believe that there's anybody else in the world who can do that. My feeling is that the best evidence of our place versus competition is where our customers come from. So the De-Icing people have come from the US to TRACKWISE because they haven't been able to find a competitor, or a US supplier. We've got a US nuclear fusion research facility who come to TRACKWISE because they haven't been able to find a local supplier. We've got the a European battery tier 1 who's come to TRACKWISE because they haven't been able to find somewhere with our capabilities. So we go to trade shows, we read the press, we follow CellLink, we find out what's going on in Asia, and there's no doubt we're not the only people who are looking at this market opportunity. However, we know, with no disrespect to anybody who's just come to IPO in the UK, they are not at the same position. They haven't got the same capability as TRACKWISE. I know for OEM A on my earlier slide that we're the only UK supplier who's pre-qualified to do that. So a competition isn't a single point on the curve, it's a multi-point on the curve. And the image that's still on your screen, we're as certain as that we can be that nobody else in the world has got this double belt press capability. We slightly hesitate about putting it out into the public domain, but it's your capital that's allowed us to do it, and it is our competitive advantage. And that has cemented further barriers to entry for our competition. Thank you. Neil has asked about the patents. How robust are your patents? Quentin has asked, what steps are you taking to assure the IP associated with your length IHT capabilities not having competitors? I filed the patent in January 2012, which is amazingly 10 years ago, and that is both some regret to me because I probably thought we would have got further in the 10 years. However, I cannot emphasize too much the learning that we have. I'll give you that we have captured as a business. So in our apprentices, in our whole corporate DNA. So I'll give you an example. So when we started with IHT, and I used to, in business development, come with a 2-meter long flex circuit, and I'd come downstairs to the production facility, and I'd find them manufacturing it as a rigid panel, and I'd tear my hair out because I say, you should be manufacturing this roll to roll. This is what IHT, this is what we're developing. And I came down the other day and heard that there was heard somebody says we can't make a panel because we no longer have panel manufacturing capability. And I almost bloody cheered because I feel I finally achieved in my mission to convert TRACKWISE to a roll to roll capability. And it is that know-how that is completely outside the patent that is really our competitive advantage. Now, I can't send a cease and desist letter. I can't take somebody to court if they're violating our know-how, but I can if they're patent. And to answer the question, how do you know how robust your patents are? Well, you never know until you either have to prosecute them or defend them. And then certainly, I probably hope that neither of those are going to be relevant. I hope I've answered the question on that. Do you want to answer that one from Keith?
Yeah, Keith with the order book at 7 million, do you receive deposits from customers to offset deposits paid to suppliers? The simple answer is unfortunately we don't.
In general, no.
Yeah,
no.
In general. I mean, where we do development contracts, for example, we might get upfront payments, but in terms of major orders, we don't do that. So But as I said earlier, we push hard with our suppliers to get payment terms, normal payment terms, which would be 30 days end of month. Some of our suppliers are actually on 60 days end of month, and we continue to push our suppliers to go to those terms.
I would say, Keith, in the cell connection system. So in the opportunity there. So the vast majority of the different OEM A to E are going to be manufactured using the same manufacturing assets, and but typically when you get to the end of the manufacturing process, when you need to cut out and test and label and pack and ship a product, it becomes more part specific. And so one of the discussions we're going to have with the OEMs or the tier one is what is customer specific tooling. And I think in that case, excuse me, in that case, that is where we can get deposits from customers to as a contribution towards our product specific tooling. But in Paul's right, and in general at the moment we don't.
I'll do the next one.
John, yep, I think so.
John A, just to confirm, are you now expecting to receive compensation payments rather than delivering sufficient product to the EV customer in the short term? Yeah, the contract is for cash payments. So as I said earlier, the contract is a compensation for orders that haven't been placed during the year compared to the guaranteed minimum volume that's set out in the contract. So we are expecting to get a cash payment for that, but obviously that doesn't reflect the full sales value. That reflects the margin that we would have expected to gain from selling those products to the customer. Next one, Keith, it's probably yours.
Yeah, so I think Neil's asking another question about the prepayment. Is it treated as a is the compensation, is it treated as a no, I mean no, it's not. Yes, it's real looking, payment. Isn't it? Yeah. I'll come back to Keith's question. You want to answer that one about the going concern?
Yes, sorry, perhaps I didn't explain that in enough detail. The 1.9 million pound trade finance facility is in the stages of going through credit approval with the bank. So that, as I said, it's converting an existing facility for which we didn't, the use was not put in place. It's converting an existing facility into a slightly different form of facility. So we're expecting that to come through in the next 2 weeks.
But is the question maybe why the need to be completed?
It's because it's not. It's going through credit approval at the moment.
So Gomi, I hope that answered the question. Keith has asked, do you talk to potential venture investors? We haven't to date, Keith, with this one slight caveat is that one of the potential tier ones that we're talking to for the CCS is I think not running the slide rule ever. I want to give false impression, but I think that is certainly the modus of the business. Now I don't know whether they take minority stakes, but I think it's certainly a point that has been raised by one of our institutional finance companies. So yeah, I hope that answers the question. Roger, it's always nice to see new CFOs buying shares in the market. Come on, get your checkbook out, Paul.
Well, actually, when I was had my first, before I had my first interview with Philip, I was doing my own due diligence on the business, and I bought some shares then, and I bought some further shares when the fundraising was announced towards the end of last year. Technically, we've been in what's called a closed period since year end because until we announced our results, we couldn't actually buy any further shares. So I will be buying some more shares in the next few weeks.
Ralph, long question. Comment and then question. I'm a 2-year, very large percentage shareholder, not angry, but extremely concerned about TRACKWISE financial failure and Philip & Co, etc., losing everything or almost everything. I remain positive about Philip & Co and TRACKWISE, but have thought Ernest Shackleton all in the same sinking boat. Remember, we still want to help, extremely interested in getting through TRACKWISE extreme financial drag. We all know the EV OEM with whom you're contract. Can you give us an idea how many EVs beyond the expected 400 so stated for this year would need to be delivered for TRACKWISE to be substantially more comfortable financially? So, Ralph, I've got my last chips on the table. I'm at one level I'm concerned, but equally, probably unlike you, I'm probably a little bit closer to it, and therefore a little bit more informed. So, what I take comfort from is the fact that the OEM has got a roadworthy product. They've got 10 years of order book, and to my mind they will succeed. And I think your point about being TRACKWISE to be substantially comfortably financial. I mean, I think that the point is about the GMV payment. It doesn't make us comfortable financially, and particularly because it's a retrospective payment rather than a future payment. But I think the point is it does insure us against the risk of further delay.
I think it's worth pointing out that we've actually got orders for 140,000 pairs of circuits to be delivered this year, which will probably be delivered end of this year, beginning of next year. And we've got an indicative forecast from our customer for next year, which we've built into our forecasts, which clearly shows a big ramp in their production through next year.
Our financial modelling now, based on the full knowledge of the facility that we've built and the cost bases, etc., show that when that facility is running, it will be a very profitable business, and we will start to earn some cash and pay down some of this debt. So I think none of us are under any illusion that it's a particularly comfortable position to be in. But I hope as Paul has conveyed, we've conveyed, we have a plan, and we haven't got all of our chips in that plan. There are some backup, and I do remain confident in the ability, on the future prospects of the OEM and for us as a business. Gomi said, you haven't talked much about cost cutting on day-to-day costs. So I'm sorry, that's maybe a mission we haven't talked about. We certainly, I mean, Paul, do you want to talk about? We have cut costs and.
When I came into the business, I joined the business in January. Obviously one of the things that we've all been focused on right from day one, and even before when I joined with Philip and the team, the business is perpetually focused on keeping our costs low. We're a very, very, very lean business. That's not to say. I mean, Philip alluded to earlier. He did 63 different jobs. That's not to say that there aren't opportunities. And myself, Philip, and Steve Hudson in particular, push the guys in the business on a very regular basis to make sure that we're keeping our cost base down. And as volumes move, change in the business, we will take steps appropriately. So, for example, the moving to the right of the production with our EV OEM customer has meant that we've delayed the recruitment of people into the Stonehouse facility until we absolutely need to do that. So that's avoiding recruitment costs, but also obviously avoiding the cost of paying people that we would have on our payroll. So we're constantly looking at our cost base.
We answered the question earlier about what I would have done differently. I would have raised more money at IPO so that we could have had a better cost base, so that we'd have had greater personal bandwidth rather than us all running around like. I mean,
on the flip side,
we run a very lean business. I promise you.
I have to say that there are probably certain parts of the business, areas of the business where we would really like to make some investment, but at the moment we are totally focused on delivering the Stonehouse facility in the second half of the year. That is our absolute number one priority.
So, Alistair, what turnover do you anticipate you could get with a current production capability?
Yeah, you want to talk about?
Yeah. So when the contract was struck, we thought we understood what the meaning of the word minimum was, and so we have implemented in our current production capability a 30% over and above the guaranteed minimum volume. So we would think about 20 million pounds a year out of the Stonehouse site, probably 5 million out of Ashvale, and probably 8 million out of Stevenage Circuit. So 33.
Yeah.
Is that right? Around 30 million pounds in total. Innovation funding. Who asked about that? Keith R. Thank you. Have you looked into innovation funding support? So the program that we're doing with Gulfstream, with GKN, is an Innovate UK funded program. So GKN are developing their ice protection systems. We're using that to develop our IHT manufacturing and the aerospace qualification of it, and indeed that the Innovate UK funding is providing some contribution of cost towards the setup and learning on the double belt press, for reasons I'm not necessarily going to. Quentin, you've had a Twitter account, hasn't been updated since 21. Yeah, I'm sorry about that. We'll either use or lose, and I think that's a fair point. Siddharth has asked. Can you just make a note of that? Siddharth asked found Allflex 30 in the US that it claims to make 12-meter long PCB. Are they competition? Well, they say they are, but I would ask why are our De-Ice competitions coming to the US rather than from Allflex? So, but as a slightly more serious answer, are other competitions who are getting close. So as I said, TRACKWISE is not the only. We can't be the only person in the world. No, we're not the only person in the world who understands the opportunity of our technology or of this long flex. But all I can say is we've got first mover advantage and this know-how, this 10 years of accumulated know-how. I think we shouldn't underestimate that. A question from Martin S. Please provide some color to your marketing and sales process. Do you have a sales team? Yes, is the short answer. But as we have indicated from the the sales pipeline, there's a very, very broad range of market opportunities and customers, and that the approach that we have is more of is a marketing-led approach. In other words, to make sure that the market through marketing is aware of our capability and dealing with the responses from that. So we've talked about our cost base and certainly one of the costs, additional costs that we would like to put in place is a strengthening of our sales team. So, John, I think we've answered that well. Are you now expecting to receive compensation payments rather than delivering? I think yes is the broad answer to that. So, if there are no new questions, I think thank you for your interest and your questions, and I hope we've adequately answered. Failing that, you know where TRACKWISE is, and we'd be delighted to have your direct contact. So. Paul, am I just okay to summarise? Or
yeah, absolutely. If you could just give us a summary, and thank you for answering every single question that we've had come through. So thank you very much indeed.
TRACKWISE's stated vision to be the preeminent interconnect partner to the world-leading innovators. We believe we believe there's some good evidence that we're doing that, in spite of what Allflex say in the US. So we're if not the leading global supplier of long flex PCBs. So we're extremely proud of our participation with the UK EVM. I think they're a great business with a great product. Sure, innovation has difficulties, and we know that, we respect that, and it has been a very, very difficult time to be in business. So They've delayed their start of production. That risk was envisaged, so we had a contract clause which we believe will is going to underpin our profitability for the year. Stonehouse is the right investment at the right time. It's a big investment. Maybe we underestimated the cost of it. Well, I'll put my hand up as being responsible for that. However, what we're delivering is a state-of-the-art roll-to-roll FPC production capability. First IHT production at scale will happen this year, and this is, I can't emphasize too highly, this is our key objective. So once we get out, I think Paul had mentioned, this is going to be a key marketing capability to show to other EV OEMs, tier ones, about what we can do. And there's a huge pipeline of opportunities, not a once in a generation, a once in an epoch opportunity. And whilst you can say there's some uncertainty, but we believe them, and we've got some very supportive funders in place to provide this cash bridge through to production. So I personally think that the share price is ridiculously oversold, but I would say, wouldn't that? We have built, with your assistance, thank you, a world-class business that you, if you are a shareholder, ought to be very proud of. I certainly am. And thank you for your time.
That's fantastic. Philip, Paul, thank you indeed for updating investors today. Can I please ask investors not to close the session, as you'll be automatically redirected to provide your feedback in order the team can better understand your views and expectations. This will only take a few moments to complete and is greatly valued by the company. On behalf of the management team of TRACKWISE Designs PLC, thank you very much for attending today's presentation. That concludes today's session.
Thank you all. Thank you.